Good evening. This is Erin Laswell with Accounting Systems. And a little background about me, real quick. I actually work in an accounting department at a small security firm in Nicholasville, Kentucky. So, this is something that is a little home to me. Uh, I decided to end up talking about transactions. Uh, they are actually a very key component to accounting, as accounting basically wouldn't exist without having uh, any transactions. Uh, Basically, they affect the accounting equation by increasing or decreasing the components of that equation, but they all end up equaling out, and the equation should stay balanced based off the transactions. And this portion of accounting is very much needed, as accounting basically wouldn't exist without having any transactions at all. And transactions, for those that don't know really what they are basically what you buy and what you sell. So they're what goes out, what comes in. Um, we also, in accounting, will record the transaction twice so that all the information should end up matching up. Uh, Transactions are such a key part of accounting that they also hold a key part of decision making, because there are three-step processes that accountants will analyze transactions, where they determine the account and its type, determine if the account increased or decreased, and determine if the accounting equation stayed balanced, which it should. Um, and however the transaction affects is the end result would affect any form of decision making that within the company. Basically, if it ends up becoming negative, then the company may have to decide to cut costs or cut labor, cut something. And if it's positive, they can be able to look into seeing what that trend is, so that in case they need to end up putting more towards that, uh, then of course in accounting with the transactions, that all levels end up having to deal with it at some way, shape, or form. In the entry level way, which is actually where I'm at in the company that I'm at, uh, we we handle everything from the initial transaction, basically from when we receive the money to inputting it into the accounting software. I personally have had to input the documentation from where credit card purchases have been made, or I've made purchase orders, and I've also done invoicing, which is what I do on a regular basis. So we record the transactions in the software, which is also kind of like a way that we are like a checkbook for an everyday person to be able to know that that's you're recording your transactions of what has came and went. Um, a lot of entry level positions are like bookkeepers, accounting assistants, which is what I am, junior accountants, and budget analysts. Uh, the mid level and executive levels, depending on the size of the company, could possibly overlap each other a little. The company that I'm in, they kind of overlap due to the fact that actually all of our levels, because my specific supervisor is our bookkeeper, but she also does a little bit more details and more accounting information. So she's a little closer to mid-level, but we did just recently hire a new controller, which is to mid-level to executive level, as he basically discusses everything directly with our president of our company. For mid-level and executive level professionals, they tend to go over the transactions in more detail. So they look over the accounts payable and accounts receivables, and they make sure that everything matches up and see where we lie in the company, and they run the reports and they try to make sure everything is accounted for. These levels of professionals do tend to be a little bit more managerial due to the fact that while they're not the ones actually putting in the transactions, they are going over the data from those transactions. And if they see discrepancies, they come to the lower levels to see what may have caused the discrepancy, or if something may have just been added in wrong. And they use the data that they receive, and they report it to financial advisors and the presidents of the companies, or the CEOs, depending on the size of the company, so that they can be able to do all of that and be able to help them make better decisions on what may need to be done within the company. And along with that, we can go with ethics. When it comes to transactions, we have to stay very ethical. And for those that may not understand what that means, basically, we have to always do good. We can't lie. We can't cheat on it. We have to put in the information as what it is. And it can be a very ethical issue if the transactions don't have the documentation, or something is not adding up, and we have to go and question that kind of information. And then basically, we have to make sure that things aren't being purchased that aren't business related or anything like that, because it ends up being a big deal, because otherwise it could end up showcasing that somebody's stealing from the company, and we have to be able to watch over that. And it's like the Bible states in Exodus 20:15, thou shalt not steal. And if they're taking from the company, that's going to show throughout the transactions. I do hope that you enjoyed this presentation, and I hope that everything ends up well. Thank you.